Now, what do we understand by the word bookkeeping? Bookkeeping. Bookkeeping in accounting. This is what bookkeeping is in accounting. I'm going to write the definition down and I'm going to break it down. I will explain it to you. Now, bookkeeping here. Bookkeeping is the systematic way by which businesses records daily transactions as it happens. That is, in a chronological way, in the appropriate books of accounts. Now, we said bookkeeping here is the systematic way by which businesses records daily transaction as it happens in a chronological, that is, in a chronological way, in the appropriate books of accounts. What do we mean by this? You see, when we are talking about bookkeeping in business, when we are talking about business on its own, the objective of business is to make profit. Yes, exactly. So therefore, anything that does not actually involve money, because when you are talking about making profit, you are talking about making money. So now, anything that does not have to do with money has nothing to do with bookkeeping in business. Now, anything that has to do with money, exchange of money for exchange of values in the business, then you are talking about the bookkeeping aspect of the business. Now, the bookkeeping aspect of the business here is the recording phase of the business. Is the first type of recording phase. Yeah, in accounting, recording, we start recording from bookkeeping, but there is also recording in accounting. But the first recording aspect of accounting starts from bookkeeping. In accounting, there's recording as well, but in bookkeeping, there's also recording. But the first recording phase, that means that there is going to be a recording in every transaction. There's a transaction that we have made now, we have recorded that. That same transaction is going to be processed when it comes to accounting aspect, which also involves recording aspect. But that one is going to be a secondary one, but this is the primary one, which is the first phase, the first recording aspect of the business transaction. So when we are talking about business transaction here, we are talking about activities of a business that involves money, that involve exchange of money for value. So now we have talked about bookkeeping records to have nothing to do with anything that does not have to do with money. So anything that has to do with money or monetary value, something that is related to money, is what we record in bookkeeping. And I want you to understand another aspect: daily transaction. You see, when it comes to bookkeeping here is letting us know that records are made as it happens daily. For example, there is a sales today, you have to record it. If tomorrow comes and there's no sale, you cannot record anything for the day because there's no sales. Until when there is sales, we record again. So most businesses sell on every day. They sell every day. If a business sells every day, they must immediately that transaction occurs, it must go into record. And this records, another thing I want you to understand is this word, chronological. Chronological means as it happens. There is a business on the 1st of May, we record it. On that very 1st of May, and that transaction comes in, we record it. We don't record the transaction that comes in the afternoon first before we record the one that comes in that came in the morning. That is wrong. We record as it happens, which means that the ones that happen in the morning are already in the records. Then the one that comes in the afternoon, it will also be in the record. It follows, it is recorded according to how it happens during business hour or activities. That is what we mean by chronological. Chronological here also talks about dates. You don't record a transaction that happened on the 5th before you record the transaction that happened on the 1st of the very same month. It is wrong. So that is one thing about this chronological aspect. It is recorded as it happens. Now, take note of another one. Appropriate books of accounts. When we are talking about the recording phase, yes, it is the recording phase. The first phase, the first recording aspect of business transaction, of accounting, yes, is this bookkeeping. But how do you record? He said it's a systematic way of recording. It means that you don't just record anyhow. It means you don't just record anyhow. There's a system that is used in recording these transactions. And each transaction has the appropriate books of accounts. That means that we have many books of accounts, and each book of account is used to make record for a specific type of transaction. When I'm talking about the specific types of transaction, I'm talking about different aspects of transaction, different types of transaction that can happen in a business. For example, if you are into trading, buying and selling, you sell goods to a customer and you receive cash immediately. That is called cash transaction. If the customer paid immediately, whether by giving you cash, which is paper notes or currency, or by transferring that money to you, or by giving you check, it is still cash transaction because the customer paid immediately. You end the business dealings. But when a customer promised to pay at a later date after receiving whatever you are selling to him or her, that is credit transaction. Now we have books for cash transaction, we have books for credit transaction. Now let's talk about the books of account that we have. Books of accounts. Books of account they are categorized into two. We have two categories of